Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Nathan Hager, joined by Bloomberg's Dan Curtis, winding down earnings season, but a lot of names to get to, starting with Opendoor. Pretty big bid on this stock after earnings. Dan, good morning.
Good morning, Nathan. That's right. Opendoor, ticker OPEN. Those shares are up nearly 20% in pre-market right now. That's as the online real estate marketplace shows signs of a turnaround. Its fourth quarter sales were above estimates. The loss was smaller than estimates. So investors really piling that into that this morning. Just to take a step back and look at the stock in the context of the longer-term perspective, the shares, they're trading at $5.50 this morning, $5.50 this morning. They're $35 a share 5 years ago. So this is a comeback story. This 20% pop is after a 90% drawdown. So when I talk about turnaround, we are talking about a turnaround. So analysts coming away saying the signs of the turnaround are taking hold, and the company has been using technology to implement that. Companies highlighting that used to take 11 people to close a contract on a home. That can now be down to 1. And in the last week of the year, the company signed more than 500 acquisition contracts. That's double the rate of the previous quarter. Why this matters? The company is not immune to the 5 to 10% national home price declines. So the faster the company can move houses, the less balance sheet risk they have, and also the more money they can make on flipping the houses. So Opendoor Technology, good signs in the morning, up 18% right now.
We got a flip side this morning from Newmont. You'd think their earnings would have looked better, given what we've seen in the gold market lately.
Yeah, it's really funny. It's kind of the side of the other coin, right? So housing prices have been down, but Opendoor's doing well. Newmont, gold prices have been up, but the company itself isn't doing well. If you don't know, it's the world's biggest gold miner. It is the fourth quarter top and bottom lines were greater than estimates, so that is off the back of that strong gold. But those shares are now down 3% in pre-market, and that's because Newmont says that output this year will fall 10%, which is about 5.3 million ounces of gold this year. So it's not going to be able to capitalize on those high gold prices as much. The output drop is because of planned upgrades at some mines and lower productions at two mines jointly owned with Barrick. Casting a little shade at Barrick, they're not super happy about that production down. That said, fourth quarter was strong and generated record earnings and free cash flow for the period.
Moving from mining to drilling, disappointing results as well for Transocean.
That's right. Ticker RIG RIG. Transocean shares are down 3% in the pre-market as the offshore oil drilling specialist it beat fourth quarter revenue, but operating costs were higher than expected, and that pushed earnings per share below what analysts were expecting. So that's weighing on the shares in the morning. The first quarter guidance of $1 billion in revenue was greater than estimates. It also indicates that top line for the whole year will be strong, but we're still awaiting some details. This company reported in the evening, but their conference call is at 9 o'clock this morning, New York time, so definitely one to keep an eye on throughout the trading day.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.